I want you to think of yourself as a multi-million-dollar racehorse. If I make $100,000, if I make $1 million a year, I make $1 million a month, whatever it is that I'm doing, I am the economic machine behind that, and that my value is far greater than what's on my balance sheet.
Each financial decision is not in a silo by itself. It has to be looked at and how it relates to something else in your plan. And most people are not looking at the big picture.
If I say to you, you look like $1 million, is that a compliment or an insult? 20 years ago, I think that was a beautiful compliment, right? Today, $1 million doesn't buy anything. $1 million in the bank at 5% is $50,000 a year. 20, 30 years ago, let's say 1981, $1 million in the bank was $170,000 a year. So $1 million had a lot more value in the future. I've shifted my conversation to say, you look like a deca millionaire. You look like $10 million. That's much more of a compliment. If you would agree with that, we can have this conversation. Okay? So here's what I want to discuss. Everybody's striving towards wealth accumulation to a point in the future where the assets are large enough and they produce enough income generating tools, sources. We have the 19 sources of retirement income. We have another one that's 21 sources of retirement income. Those sources, if they replicate the income, that's the goal, right? That's what we're trying to get to, trying to sustain ourselves off of this, right? So I want you to just step back for a second. And when you think about money, and you think about your own net worth versus a distinction of net wealth, and we're going to dive into that, there's many ways that you're going to become a millionaire, a deca millionaire. There's not one way to do it, okay? We see people in different industries, different businesses, in, different kind of businesses that supply a widget to somewhere, pharmaceutical, educational businesses. And in those structures, they all, not all, but many of them find a way to be not only a millionaire, but a multi-millionaire. And I want you to think about something. What are the goals that you've set forth, right? If we're sitting here, let's say you're 25 years old. Basically, 65, 40 years is like an eternity. It is way far in the future. And I find so many people are sitting here saying, I work for XYZ. I just want to get to a point where I can retire. And like they're already thinking in the wrong mindset, right? Where you are right now is a summary. It's a collective group of beliefs of where you are, meaning my history, the way I was brought up, where I went to school, how I socialized, the way I think about my future, whether I believe I'm in control of that future or not, is a whole other conversation. But I believe that let's say that I am 25 years old for a second, and I got a great job out of college, and I'm making $100,000. Like, that's a great job, like today. When I graduated college way back when, 34 years ago in 1990, my major, the economics finance major out of Bentley College at the time, which is now Bentley University, The job was mutual fund accountant, do the pricing of a mutual fund, working for either one of the big institutions. The job paid $19,000 per year. And the marketing guys were getting 50. And we're like, shit, we're in the wrong freaking major. And everybody had this like reactive, like, oh, it's not going to be a good job. I chose a different direction because I'm like, I can go into the financial services business and fail and make more than $19,000. Here I am 34 years later. Smallwood Wealth Management is the lead sponsor of this podcast. You have an opportunity to have a free, no obligation conversation with one of our qualified advisors. Go to smallwoodwealth.com, schedule a call, or call us at 800-797-1000 and get on our calendars. But I want you to think about something for a second. And everybody listening to this right now is in a different phase of their life, meaning you might be 65, you might be 85, you might be 45. And you probably, because most people that I talk to, not everybody, there's a lot of people are like, oh my God, this is the greatest thing. I have so much more net wealth than I ever thought I was going to have. But the reality is they feel lack, okay? They're feeling like they're behind the eight ball. And one of the things, they haven't saved enough. They spent too much money. And they're bothered by it. And my position is this. Let's focus on what you really want to achieve in the future. What is the wealth that you're trying to accomplish to get? And are you taking the right actions today with the information that you have to drive you towards that future? Because what happens is what you believe is a lot of money today, when you get there, you're like, oh, I need more money. I want more things. There's a thing called, I think it's Gresham's law. Got to check this one. I didn't fact check it before, but it's expenses rise to income. So people have this belief, well, I'm making 100, I go to 200. If I hold my expenses, I'll just be able to save more money. And that never really plays out. I always find that people are always, we bought a bigger house, we bought a bigger car, sending the kids to a better school, whatever it is, right? Those expenses are actually happening. But I want you to step back and I want you to think about this. You're 25 years old. You've got this $100,000 job out of school. You might have $100,000 or $200,000 of student loans. You might not. You might have, the company's got a 401k. You're going to put some money in the match. You might have $5,000 or $10,000 sitting in your savings account. And even though you have this $100,000, you feel like, how am I going to get there? And my point is, if I look at where I want to be 90 years from now, and then where I want to be at 65, and where I want to be at 45, and where I want to be at 35, 30, and where I want to be next year, I start to break these things down into incremental little action steps. And there's a whole nuance between saving and investing. The conversation about saving, we do it in chapter 3 of It's Your Wealth, Keep It. There's a psychology behind it. Whether you save and or invest, those two actions are linked together. Saving and investing is basically the same thing, right? Saving, if you look at, there's a savings account, which is secure and safe. An investment might have speculation and risk on it, right? But in essence, I'm taking money from my earnings and I'm investing it in either a savings account, because that's going to give me a return. That's a form of investing, right? And I'm going to invest it in the stock market. I'm going to invest it in a business. I'm going to invest it in whatever I'm going to go, whatever it is, right? But I want to step back for a second. And I want to look at this and say, if you're 25 years old and you're making $100,000, you might be making 200, you might be making 50, whatever it is. Use this same math, right? When we talk about becoming a multi-millionaire, a deca-millionaire, a millionaire, even though you're on paper, your net worth, right? If you think about this, and this is why I want to start very small and start in a very tight environment here, which is I make 100. I'm going to be paying a certain amount of taxes, right? If you think about it in the form of a blueprint, if you're listening to this on the YouTube channel live, I'll be showing a blueprint. This happens to be a 45-year-old person, and it's the income, it is the taxes, it's how much money is going into savings, and then there's your lifestyle. But I want you to change the focus for a second. So I'm on that blueprint. I make 100. I'm single. I pay taxes. I put money in some places. I have a lifestyle. I'm accumulating assets somewhere. But my net worth at that moment, if I have $100,000 of student debt and $10,000 in the bank, I have a negative $90,000 net worth. And that's like the change. Like, oh my God, how am I going to get out of this? I got to accelerate that debt. I got to get rid of it. Not necessarily. But I want to flip the switch. So there's net worth and there's net wealth. And I learned this from one of my great mentors in the business in the early 90s. And he said, a person earning $250,000, and this was the conversation, with no assets, there's an economic value and there's a human life value. You've heard these terms maybe, right? The human life value doesn't necessarily equate to economic value. Okay? So the economic value is the income and the contribution that you create in the economic society. The human life value is your contribution in society, such as Mother Teresa what was an example? She doesn't have an economic value. She has a human life value that was amazing, right? Because how many people did she save and how many people did she touch, right? So as you're sitting here, if I was creating a balance sheet, one of the things that I want you to think about is, if I'm making that $100,000 and let's just say that that's a building. I own a rental property for a second. That rental property is producing $100,000 worth of income. What's that property worth? You've heard of a thing called cap rate, right? 5%, 6%, 10%, 15%, depending on the quality of the property. But let's just use, for an example, 5%. So if the building burnt to the ground yesterday, how much capital do I need to rebuild that building to produce the income? $2 million. $100,000 divided by 0.05 is $2 million. So if I had $2 million sitting in the bank at 5%, I'm making $100,000. Math makes sense, right? So here's what I want you to think about. Why am I doing this? Why am I saying this? What's the significance of the conversation? Is on a wealth curve blueprint, you have your income, you have your current assets, your current liabilities, and then all these goals and everything that you want to achieve. Businesses and accumulation and get married and college and all these, you buy a second home, join a country club. All these things are massive goals. But the net wealth is actually $2 million less the $100,000 of student debt plus the money that you have accumulated. That's your economic value. And the way we look at this, and everybody's safe and everybody's happy here, if that 25-year-old was run over by a bus yesterday, if you went and today you had the opportunity to sue the person that ran, the bus driver, what are you going to sue for? The loss of the $100,000, just like the building burning to the ground, right? So you start thinking about it, is what is the economic value of that person. Is the 100,000 the only thing he's going to make during his entire lifetime? Is there going to be, what's the exponential curve that we're riding up to get to that point? It's millions and millions of dollars, way beyond the $2 million, right? An insurance company on a 25-year-old, if he came into the insurance company and said, and we've heard these kind of conversations, I want to buy the maximum amount of coverage. So yesterday I passed, today my family gets to say, I want to buy the maximum. You're not going to say, how much do you need? You're not going to do any of those things, right? An insurance company like that might be on a 25-year-old 30 to 35 times income. So it's $3 million to $3.5 million. Because of all the future value that's embedded in somebody at that current age. The older you become, if you're 70, worth $10 million, retired, not earning any income, the economic value, the insurable value is usually 1 times the estate. So you can go to an insurance company and still buy $10 million worth of coverage. That element of that human life value is missing from the majority of balance sheets, okay? I'm bringing this back to a conversation is that I want you to think of yourself as a multi-million-dollar racehorse. If I make $100,000, if I make $1 million a year, I make $1 million a month, whatever it is that I'm doing, I am the economic machine behind that, and that my value is far greater than what's on my balance sheet, right? That's the net wealth. And that if I'm sitting here today, I'm 56, I remember the 25-year-old John, I remember the 20-year-old John, the 15-year-old John, the 45-year-old John. You go through different phases, but the reality is what you want to look at is what is it that I do in my field, in my career, in my online presence, whatever it is, however you make money. How do you monetize that to the fullest extent? What are the things that are going to drive you to increase? Like if I'm a teacher, there's sort of a finite amount of income that I can earn at these steps. But if I go get my master's, I can get up these steps. So those investments become in yourself, not in the bank. And I see people do this all the time. They're afraid to make the investment in themselves because they don't want to get rid of that cash. It's like, oh, I can't get rid of that cash. But when you look downstream, you're like, well, you'd go up 3 steps and you'd make significantly more money, which therefore would allow you to save more money, which would give you more pension. And the ripple effect is massive. So the investments are not just, I'm a financial advisor. We're a registered investment advisor. I have a whole bunch of, I have a Series 7 license. I have a life and health license. I have all these different licenses. I'm a certified financial planner. Since 1993, I've taken a fiduciary responsibility since getting a CFP designation, okay? All of these are tools. The financial products, the way you make money are basically, I have this $100,000 worth of income. I put it in a savings account. I'm storing it for a short-term need. If I put it into a piece of real estate, that's a longer time frame, right? I'm still storing the wealth. So to me, if I'm this million or multi-million dollar decamillionaire, whatever I am on a net wealth basis, the golden goose is me getting up and doing what I do, right? That's the most important asset. You've heard me say this 400 times. Maybe if you're listening, this is the first time, it's the first time, right? But you're going to listen to this a lot more and you're going to really understand what we're thinking about, because if I think of myself as the multi-million dollar person that I am because of my net wealth, not my net worth, what am I doing to unfold those opportunities in my financial plan? And you see these patterns and you have friends, right? It's not you. You have friends that you see, they get $1 and they spend it. and it's always gone. What are they doing? They're not in alignment with what they want. They're afraid they're going to lose that money. They're afraid of something, right? I see people in their 20s who won't invest in the stock market for fear of loss. Well, there's ways to invest in the stock market where the chances of loss, 100% cataclysmic loss, are very, very low, right? Single stock concentration, 100%. My point is, part of the goal is actually believing that you actually are the $2 million person. Once you understand that, is what is the tactic? Where am I going to put money? So if I make this $100,000 and I'm 25 years old, or I'm 45 years old, or I'm 50 years old, the longer I wait to start saving money appropriately and investing that money, the chances of my success go down because of the time frame. And I see people getting into their 60s and they're tired. They're so tired today. People are so tired. And they haven't accumulated enough money and they're feeling like behind, and they just kind of mail it in. And they're missing the most wonderful opportunity, which is if you're 60 years old and you work for a company, you're a business owner, you're the most valuable person you've been in your 40-year work career, your 35-year work career. You have the most knowledge. You have the most success. You have the most creativity, most likely, that you've had. But all your friends are going, oh, when are you going to retire? When are you going to retire and play pickleball for 48 hours a day, right? Certain things need to really be at a point where we understand what is it that I need to do with my money today. And no matter where I am, I can still get to where I want to go. There is no magic bullet unless I get lucky. I mean, stock options are, people have stock options and they turn into a ton of money. Some people, they don't. But once they're there, how do I manage them and move them into the place where I secure myself? I have foundations, I have success, right? Here's this 25-year-old person and you see this economic potential, right? And it's like that future growth of what you're doing and the potential of what you're doing is really fueled by the amount of fuel that you enter into the system, right? If I'm not saving enough money and I get an obstacle or hurdle or a setback or something, my business loses money, it's all temporary setbacks. It's all feedback, right? I don't have enough money to weather that storm. I'm not going to make it where I want to go, right? But the key, if I want to stay on this track, and let's just say that I make the 100,000, I never make any more money. I'm 25 years old. I'm sitting in this environment where, if I look at this on the curve, I'm making 100,000. I'm paying $15,000, $18,000 in taxes. My lifestyle is about 73,000. I'm saving about $14,000 per year. And over time, I've got tax on the gains, right? So like even here at 65, the potential for this wealth is over $10 million. Just somebody making that $100,000, right? And then you start to dream about this and say, what if my salary were to increase by 10% a year? What if I've got inflation? I've got all these things. Even if there's 3% inflation, what you see on the curve is with that 3% inflation, I'm not keeping pace. I start to run out of capital because I'm having the lifestyle up here has gone from that 73,000 to 117,000, which is now chipping away at my savings. And these are the dynamics. But if I make 3% increase, the curve changes, right? So everything in here is a manipulation of money, right? Because money isn't math. Money is a commodity, is subject to erosion principles, right? Meaning, taxes, transaction costs, inflation, planned obsolescence, technological change, stuff is constantly pushing. I mean, if we did a podcast on the amount of taxes that get paid out of your entire wealth, okay, it's unbelievable, okay? But here's what I want you to understand. If I put away 15% of my income, I'm going to get to this spot that, with the $10 million, I'm pretty happy. If I change this to be lifestyle at 84%, so it's just one little increase of a percentage point. So if I was doing a comparison right here, I just found I dropped the lifestyle from $73,000 to $72,000, $1,000. That $1,000 now invested in the strategy at the same 65 mark produces almost $600,000 more money in wealth. That 1% difference. That mindset of just understanding the variables, I would argue that when you dig in and you look at a blueprint, if this person's making 45-year-old on this one, this is my sample, business income, making about $675,000, saving about 15%. Most people are really worried about the rate of return on that capital. And they're missing all the money, this $500,000-$600,000 that's flowing out in taxes and opportunity and lifestyle and debt structures, right? That's where the real money is. The returns are returns. And in the curve, I'm simulating this at 13%. I don't have market volatility. Put market volatility in here at 65, down market, here, up market, I'm at 6.2. That's that volatility adjusted returns. That's a commodity. The market is never going to be an average rate of return. It's going to have volatility adjusted returns. Okay. So what I want you to be thinking about is, as we sit out here, the number one thing that you're going to do, and we're going to kind of close this up, is your net wealth is far greater than your net worth. Even if you're worth $1 billion. If you're worth $1 billion, your net wealth, your potential wealth, your future value wealth is far greater, depending on the actions and strategies that you put out there. The goals that I have set for myself need to be something that's going to drive me towards what I really want, this compelling future. And buying into that future. Now, if I've chosen a corporate career path, inside of that corporate career path, how do I get myself to the right place? Balancing freedom of time, freedom of energy, freedom of lifestyle, my health, and the opportunities within that career. The synergy, the balance has to be there, because what we all see is people burn out. They work too much, they don't enjoy themselves, and they don't make it, right? Because they're stressed out. So the goals have to be, I want to make more money. I want to create more wealth. I want to have more free time. I want to have more enjoyment. I want to pay less taxes. I want to have less risk. I want to have less, fees and costs. I want to invest more money, save more money. I want to have more benefits and more protection around that wealth. I want to enjoy more of that money in retirement. And I want to pass more to my family. I want all those things. And every single year, as I increase my possibilities, those moving targets are going to be moving targets, because that wealth potential is far greater every single year. Like in this particular strategy, if I was able to increase my income by 20%, that's 290%, 20%, the logarithmic scales go up exponentially, right? So it's sort of like, how do I when you look at that on this thing, right? You see, we're talking $250 million. We're talking through $500 million, right? Like the future is not a linear future. It's nonlinear. It's exponential. That's what you need to be thinking about it. And getting into the goal, like getting with somebody that really understands what your potential is, and more importantly, what you want your potential to be. And they drive you and push you to become a better version of yourself, to make the right decisions and the right investments. Literally sitting with somebody recently, and they're like, I'm stuck. I'm 50. I want to do something different. I've got a chunk of money. And I'm like, take that money, a piece of it, and invest it in yourself. Go back, get your master's, do something that's going to fulfill you and get you to the next level, and enjoy it. And then what's going to happen on the back end? It's pretty cool, right? So if you're listening, I'd love for you to share this, like it, comment, share it with people that you think can benefit from it, subscribe to the show, subscribe to the podcast. If you're listening to it on a podcast, if you're on the YouTube side, listen to it there. If you want to have a wealth curve conversation about your future and what your goals are and what should I be doing next, that's what we do best, is help understand where you are and where you want to go. Awesome. I appreciate you listening, and thank you.